strengths in retail, finance, fashion, media advertising, the arts, and more. It was fascinating to listen to the pitches and meet the young entrepreneurs. The development of technology had literally empowered a new generation to launch ventures at low cost. And the pace of innovation kept on increasing. The angel investing scene was thrilling, and it was clear that New York City was growing to become what it is today, one of the largest and fastest-growing startup ecosystems in the world. In that first year back together reviewing new companies, we saw about 300 startups thanks to the angel meetings and other events. We jointly invested in 3 of them. We met with the entrepreneurs and sometimes their clients, asked about their traction, business model, plans, and more. When we decided to invest, it was because we saw a unique combination of a strong idea with a solid team. But even then, we knew that many things could go wrong and that our investments were risky. We knew that angel investing personal funds in the very early stage of a startup, means investing at the riskiest point in a venture's development, because so little of the company's business model has been proven out. We also knew how the entrepreneur's road ahead would be full of ups and downs, and that success would depend on both sheer luck and how their team would adapt and react to new circumstances. The statistics are known. 70% of startups who have raised a seed investment from angel investors still fail. They fail for multiple reasons, but in the end they fail most often because they don't establish sufficient market traction and can't raise the next round of funds to keep going. Fewer than 10% of seeded startups scale to $10 million plus in profitable revenue, or experience successful exits with solid returns for investors and founders. So when Jim floated the idea of a book targeting entrepreneurs to help more of them succeed, we gave it serious thought. In the end, both of us had been entrepreneurs and had rich corporate careers. We could leverage our own experiences and knowledge. But just as important, we had access to a unique network, Harvard Business School alumni. We could complement our own experiences with the experience of other HBS entrepreneurs. Quickly, the idea emerged to interview about 20 Harvard Business School entrepreneurs. The thinking was simple. If HBS entrepreneurs would open up about what they learned the hard way or what they wish they knew before starting, their wisdom would be interesting and relevant to younger and less experienced entrepreneurs. The interviews turned out to be fascinating. Similar messages kept on popping up. Not in the exact same way, but with the same conclusion. Other messages were all over the place, destroying preconceived notions about entrepreneurship. This book summarizes these pearls of wisdom. The chapters ahead provide a hefty amount of first-hand advice, as well as inspiring stories from those who have done it. We've organized the material around the typical phases of a company's development, from the business ideation phase to forming a founding team and launching with few resources, from the struggles of growth and financing to the ultimate exit. We've included generous quotes, more than 400, throughout the book to bring to life the key lessons, especially the unconventional wisdom, the kind of advice these entrepreneurs wish they had known beforehand and that wasn't taught at HBS. Smart Startups is for those of you dreaming of becoming the next entrepreneurial success story. We hope you find inspiration in the entrepreneurs we've interviewed. Lastly, we hope this book will give you courage, arming you with pearls of wisdom for your entrepreneurial journey. The Entrepreneurs and Their Companies.
HBS is the passport that opens the doors to so many things. It gives you the freedom of travel in the entrepreneurial world, but there's no Lonely Planet guidebook. You're just out there. Anna Auerbach, work.
We interviewed 18 Harvard Business